One. Today I'm going to show you the personal wealth management system I built for myself. Not a course, not theory. This is the actual system I use every single month to decide where every rupee of my SIP goes. Most people invest randomly. They pick a fund that gave good returns last year, put some money in, and forget about it. No plan, no allocation, no rebalancing. And then they wonder why their portfolio doesn't grow the way they expected. I wanted something better. Rule-based, emotion-free, and simple enough to actually follow every month. And the best part, I built it as a free web app that you can use too. I'll show you how to set it up at the end. So let me walk you through exactly how it works. First, let's talk about what most retail investors actually do. They chase returns, buying funds that performed well last 1 or 2 years. They panic sell during crashes. They have no target allocation. They never rebalance. And all decisions are driven by news, tips, and emotion, not math. The result? Underperformance, anxiety, and wealth that grows far slower than it should. The foundation is a 2-bucket structure. Bucket 1 is my core portfolio, 7 mutual funds covering large cap, mid cap, small cap, U.S. market, gold, and debt. Funded by monthly SIP. Bucket 2 is my dividend bucket, 13 PSU and blue chip stocks like IOCL, ONGC, NTPC, HDFC Bank, ITC, Infosys. Funded by month-end surplus cash. Separate buckets, separate logic. Now here's the core, the deviation-based action engine. Deviation equals current value divided by total portfolio minus target percentage. Within plus or minus 3%, do nothing. Between 3% and 5%, adjust SIP, greater than plus 5%, trim, less than minus 5%, increase allocation. No emotion, no guesswork. The math tells me what to do. These thresholds are the same bands used by professional fund managers. The system automatically switches between 2 modes. Balanced mode activates when 4 or more funds are in do-nothing territory. SIP distributed proportionally by target percentage. Correction mode activates when too many funds have drifted. SIP weighted by shortfall. Overweight funds get 0. I don't decide which mode. The system decides. I just invest. Let me quickly show you the 4 formulas that drive all the money decisions. Balanced SIP, simply SIP multiplied by target percentage. So with a 30,000 rupee SIP, Nifty 50 at 33% target gets 9,900 rupees every month. Correction SIP multiplied by each fund's shortfall divided by total shortfall across all underweight funds. The fund with the biggest gap gets the most money. Balanced lump sum, extra cash, deployed as cash multiplied by target percentage across all funds. Correction lump sum. Only funds with more than 3% negative deviation qualify. Cash goes to the worst hit funds only. Every rupee has a destination. Nothing is random. For the dividend stocks bucket, the strategy is even simpler. Whenever a dividend gets credited, I reinvest it into the most underweight stock. My app ranks all 13 stocks by gap from target, most underweight at the top. Dividend comes in, I open the app, look at number 1 ranked stock and buy it. Quick 2-second check. Underweight because not bought yet? Buy. Price has fallen. Still buy. That's the whole point. New stock added recently? Split between top 2. That's it. Done. So why does this work long term? 6 reasons. Rule-based decisions eliminate emotion. Auto mode switching means I never think about being aggressive or conservative. The portfolio decides. Target allocation discipline means every fund has a purpose. Systematic rebalancing catches drift early. Consistent monthly SIP plus occasional lump sum is how compounding works. And most importantly, it's simple enough to actually follow every month. I had the system independently reviewed and it scored 9 out of 10 against institutional standards. Typical retail investor scores 3 to 4. Fee-only advisor scores 9.5. The gap between my system and a professional one is small. The gap between this and what most people do is huge. Setting this up takes less than 2 minutes. Open Safari on iPhone or Chrome on Android or laptop and go to the peakyblinder.github.io/wealthmanager/. No download, no sign up. Your data stays on your device. On iPhone, Share button in Safari, then Add to Home Screen. On Android, 3 dots in Chrome, Add to Home Screen. On laptop, install icon in Chrome address bar, click Install. For Google Sheets Sync, create a sheet with 3 tabs named Allocation Structure, Dashboard, and Stocks. Extensions App Script, paste the Google Apps script file from the description link. Deploy as web app, anyone access, copy URL, paste in app settings, done. The app comes with sample data so you can explore before entering your own numbers. Link is in the description. If you found this useful, subscribe. More personal finance content coming. See you in the next one. Let me show you how the app actually works with a live example. The dashboard shows your total portfolio value, health score, and whether the system is in balanced or correction mode. Right now it shows correction mode, meaning some funds have drifted and need attention. The decision screen shows every fund with a clear action. Nifty 50 is at plus 9.3%. Trim. Junior Bs, mid-cap, and small-cap are all underweight. Adjust SIP. U.S. market, gold, and debt are within range. Do nothing. No guesswork. The math tells you exactly what to do. The SIP screen shows this month's allocation. Because we're in correction mode, overweight funds are skipped. The 3 underweight funds get the full 30,000 rupees, split by how far each has drifted. Midcap gets the most because it's furthest from target. The Lumpsum screen works the same way. You have 15,000 rupees of extra cash. It goes only to funds more than 3% underweight. Overweight and mildly underweight funds are skipped entirely. Finally, the dividend stock screen. 13 stocks ranked by most underweight. L&T is number 1 right now. So when your next dividend arrives, open the app, buy L&T. Done in 10 seconds. Everything is calculated automatically. You just follow the numbers. Now, one important thing before you set this up. The allocations you saw in this demo are my personal targets based on my own research and risk appetite at age 26. They are not a recommendation. The system works with any allocation you choose. Start with your risk appetite. If you are aggressive, put more into mid-cap and small-cap. If you are moderate, lean heavier on Nifty 50. If you are conservative, increase debt and gold. As a rough guide, Nifty 50 typically forms the backbone at 25 to 40%. Gold and debt act as stability buffers, usually 5 to 10% each. U.S. market exposure is optional, around 5 to 10% for global diversification. Mid-cap and small-cap depend entirely on how much risk you are comfortable with. The one rule the system enforces: your targets must add up to exactly 100%. This is not financial advice. Do your own research, consult a financial advisor if needed, and invest based on your own goals and risk tolerance.